this video, we will focus on posting the adjustments in the general journal and the general ledger. Before we do that, let's quickly summarize. If our adjustment is accrued, then it means we paid or received less. So that means we need to increase or to add. And if we have a prepayment, that means that we paid or received too much. So that means we need to decrease or to subtract. So now let's have a look at the adjustments one by one and post them in the general journal and in the general ledger. Our first adjustment is telephone account in arrears. Now the two accounts for this adjustment we have is telephone, which is an expense, and our expense will increase on the debit side. And the second account we have is accrued expenses, which is a liability, and our liabilities increase on the credit side. So now let's post that to the general journal. So we will debit our first account, which is telephone, 470, and we will credit our accrued expenses also with 470, and our narration is telephone account still outstanding. And please note, we write the last day of the financial year in the date column. We don't write the number of the adjustment. Now let's post this entry to the general ledger. In the nominal account section, our telephone has an opening balance of $930. And now to post our transaction, we will credit our accrued expenses with 470, and then we will debit our telephone account with the same amount. The description in the details column will be accrued expenses. Also note that the date is the end of the financial period, and the opening balance comes from our trial balance. And in this case, our telephone account has a debit balance. And this completes our double entry process. Our next adjustment is monthly insurance premium is $650. Insurance is paid until March. Again, let's have a look at the two accounts we have. The one account we have is prepaid expenses because we paid too much, and our prepaid expense is a current asset. Therefore, we will debit our prepaid expenses. And the other account we have is insurance, and since we need to decrease our insurance amount, expenses decrease on the credit side. Now let's go ahead and post that in our general journal. Our debit entry will be entered first, so it's prepaid expenses $1,950, and our credit entry will be insurance $1,950. Our narration will be insurance paid in advance. Please note again that we will not write 2 in the date column in our general journal. We will write 31. Now let's post this transaction in our general ledger. Our insurance account has an opening balance of $9,750 on the debit side, and we will first debit our prepaid expenses with $1,950 on the debit side, and our details will be insurance because it is for insurance. And then we will credit our insurance account also with $1,950, and the description in the details column will be prepaid expenses. Again, note that our date is for the end of the financial period, and our balance comes from our trial balance. And this completes our double entry process. Let's move on to the next adjustment. Our next adjustment is yearly interest on fixed deposit accrued. Our one account we have is accrued income because we received less, and our accrued income is a current asset, and our assets will increase on the debit side, And the second account we have is interest on fixed deposit. That is an income, and since it's accrued, it means we have to add, and our income increases on the credit side. Now let's go ahead and post that in the general journal. Accrued income 2,240, and our credit entry will be interest on fixed deposit with the same amount. Our narration will be interest on fixed deposit still in arrears. Again, note to enter the date, which is 31, and not the number. Let's go ahead and post this to our general ledger. Our interest on fixed deposit does not have an opening balance like the previous two accounts, so we will just enter the information in our adjustment from the general journal. So we will first debit our accrued income of 2,240, and the description in the details column will be interest on fixed deposit, and in our interest on fixed deposit account we will credit accrued income with 2,240, and again the date will be the end of our financial period, which is 31 December 2018. And this completes our double entry process. Let's move on to our next adjustment. Our last adjustment is rent had been received for 14 months. The two accounts that we have here, the one is rent income, because we are receiving rent, we are not paying rent, and since we receive too much rent, that means we need to decrease, and our income decreases on the debit side. The second account we have is income received in advance, which is a current liability, and our current liabilities we post to the credit side. Now let's go ahead and process this adjustment in our general journal. We will debit rent income with 3,300, and we will credit income received in advance with 3,300 also. Our description in the narration will be rent received for 14 months. And again, note we write 31 in our date column, which is the end of our financial year. We do not write the 4, which is the number of adjustment. Now let's go and post this in our general ledger. Our rent income has an opening balance of 23,100, and this amount comes from our trial balance. In regards to posting our transaction, we will credit income received in advance with $3,300, and the details in the description will be rent income, and then we will debit our rent income with the same amount, and the detail in the description will be income received in advance. Again, the date will be the end of our financial period, and the 23,100 we will get in our trial balance, because our rent income has a balance of $23,100 on the credit side. And this will complete our double entry process. So in conclusion, we have two adjustments that are current assets. They are accrued income and prepaid expenses. We will post those to the debit side, and then the other accounts, either an expense or an income, we will process on the credit side. And the other two adjustments, which are liabilities, are income received in advance and accrued expenses, and we will post them to the credit side. And then the other accounts, either expenses or income, we will post those to the debit side. So our accrued means that we should increase or add, so we will enter those transactions on the same side. Let's have a look below at what we mean by this. Our telephone account has an opening balance on the debit side, and if we have an accrued expense, we will enter that also on the debit side. So it's on the same side. Both the balance and the adjustment is on the debit side. Also, our interest on fixed deposit, which is an income, has a credit balance. But if we encounter an adjustment for accrued income, we will enter the accrued income also on the credit side of our interest on fixed deposit account. So that's what we mean by we will enter it on the same side. But for our prepayment, it means that we should decrease or subtract, which means we will have entries on the opposite side. For our insurance account, it is an expense, therefore it shall have a debit balance. But if we have an adjustment of a prepayment on our insurance account, we will enter that on the credit side. And our rent income will have a balance on the credit side since it's an income. But if we encounter an adjustment for income received in advance for our rent income, we will enter that on the debit side. So you can see for insurance and for rent income, we have two transactions and both are on the opposite side of each other.